Hello and welcome back. In this lecture we're carrying on looking at agency law. So in the previous lecture we looked at how an agency relationship could be created, how we get to that position where an agent is able to negotiate a contract with a third party but not on his own behalf, on behalf of the principal. So the authority that an agent has to enter into a contract, the extent of that authority, will depend slightly on the source of authority. And there are three sources of authority that you need to know about. The first one is actual express authority. This is the easiest one. This is quite often created by authority by consent. So it's where the principal expressly gives the agent the authority to do something. For example, please act as my agent to buy 20 wheelbarrows from Fred. This is an express authority. It tells the agent that he's allowed to go and buy 20 wheelbarrows and he has to buy them from Fred. This agency arrangement could have gone on and said more specifically how much he wanted him to spend or which wheelbarrows he wanted him to buy or when. The terms of the agency and the extent of the authority of the agent comes from the express authority. So you'd have to interpret that express authority in order to see exactly what the agent was authorised to do. Now that express authority, as we've already seen, doesn't have to be written down. It could be written down, it could be a verbal agreement. Now there's another sort of authority which is also an actual authority, so it's real authority, but this time it's implied. So we have actual implied authority. Now this means it's implied from a person's job, from the role they're carrying out, or even from their employment. Maybe they're a sales director, therefore they have implied authority to enter into sales contracts. Or an office. They are a director of a company or a company secretary, and they have certain implied authorities coming from that position. And we've got a couple of examples here. A partner in a partnership has implied actual authority to enter into contracts in connection with the partnership business. And that partner would then enter into a contract which would bind all the partners in that business as a whole. So for instance, the partner in a business could enter into a contract to rent premises for the business to operate from. It could be to order stationery for the business. A perhaps simpler example is an estate agent. If you appoint an estate agent to sell your house, then he may have implied authority to do all things incidental to that authority to sell the house. For instance, to advertise it in the local newspaper, maybe to show people around. And then we have, finally, something called ostensible authority. Now note, this is not actual authority. This is often related to authority by estoppel, which we saw in the last lecture. Remember, that was the case where the principal had given the impression that he wanted someone to act as his agent, and he was therefore stopped or prevented from going back on that statement until he'd given prior notice to the third party. Now, the key point about ostensible authority is that it is created by the principal. The agent cannot create his own ostensible authority. However, when the principal creates this authority, it could be expressly, he tells a third party that a particular person is his agent, or it could be created by inaction. Now what I mean here is he knows that the third party believes someone to be his agent, and he lets them carry on believing that. He doesn't correct them. And if he knowingly fails to correct that third party, then we may well create ostensible authority, again creating it by estoppel. So we've got a couple of examples here, and we can have a look at a couple of real case law examples in a moment. So first of all, the simple one, the principal tells the third party that the agent is allowed to negotiate contracts on his behalf. Therefore, so long as the third party believes that to be true, the principal cannot go back on that. He can't change his mind and refuse to honour a contract. However, he can change his mind, that's fine, but he has to make sure that he tells the third party, and once he's told that third party, that agency by estoppel, that ostensible agency, will come to an end. Another example is concerning a group of company directors. Now I want to have a look at that one in a bit more detail in a moment. Now with actual authority, we were looking at the limit of the authority came from either the terms of the express authority or came from what was usual or customary for a person to do in a particular role or position. But ostensible authority is actually much wider, because it's a question of what did the parties believe, what was the impression that the principal gave. So ostensible authority is normally much wider than actual authority. If ostensible authority exists, it's generally quite hard for the agent to exceed that ostensible authority. Now let's look at a couple of cases. These are very famous cases, and it's very likely that the examiner will try to replicate the facts in one of these cases in a question for you. So you need to make sure you're familiar with the storylines here. In this famous case of Watto v Fenwick, we had the principal, get a pen there, the principal who owned a hotel, and he appointed A as the agent to run the hotel. And he said to A, on no account must you buy cigarettes from the third party. So there was a third party who came along offering to sell his cigarettes, and A, despite that express statement by his boss that he shouldn't buy these cigarettes, went ahead and placed an order. Now, he was acting as agent there for the principal, so the contract was between the third party and the principal. Not surprisingly, the third party tried to enforce that contract and sue for payment. However, the principal said A didn't have any authority to enter into that contract, because I told him, in fact, not to enter into that contract, so the very opposite. Now, the court looked at this and they agreed. They said, yeah, A had no actual express authority. However, he had something else, because A was a hotel manager. And at that time, it was usual for hotel managers to buy cigarettes and things like that over the counter from travelling salesmen. And T, the third party, having no knowledge of the statement by the principal that he didn't want A to buy cigarettes on credit, was entitled to assume that A had all the usual authority of a hotel manager. So the third party could assume that A had implied authority to buy the goods he needed to run the hotel. If the third party had actually known about this restriction that had been placed on A, then the answer might have been different there. But because he didn't, he could assume that A had implied actual authority, and therefore there was a binding contract between the principal and the third party. The next case is an interesting one. It's an example of ostensible authority created by what we call failure to correct. And in this case, Freeman and Lockyer versus BPP. Now, in this case, a group of directors carried on a property business together. However, one director did pretty much all of the work, and as long as he was entering into contracts that were profitable for the business, the other directors were happy for him to carry on doing that and pocketing the proceeds. However, this particular director had never been formally appointed as a managing director. Now, we'll see this later when we look at company law, but basically a managing director has very extensive powers to enter into contracts on behalf of the business. The scope of his authority as a managing director is very, very wide. That's his implied actual authority. However, if he were just an ordinary director, his authority to enter into contracts would be much narrower. Now, this particular director was acting as if he was a managing director, and third parties dealing with the company believed that to be the case. However, one day, this director entered into a contract which the other directors didn't like, and their response was to say that he didn't have authority to bind the company because he was not the managing director, just an ordinary director. However, the courts looked at this situation and they said, well, yeah, he wasn't appointed as a managing director, so he didn't have any actual express or any implied authority by virtue of his position as MD. However, the fact that the other directors knew this was going on and did nothing about it meant that they were stopped from denying that the director was an agent of the company. So, as a result of their inaction, if you like, the director had apparent authority created by estoppel. Now, apparent authority there is the same as ostensible authority. They mean the same things, okay? And the examiner may use them interchangeably, so don't worry about that. So let's have a look at this interactive question, testing authority. Now read the scenario and have a go at the answers, and then we'll compare the two. So just pause the recording while you do that. Okay, so we've got Michelle, who works in Nathan's building firm. She's employed in the purchases department. Nathan doesn't have approved suppliers, but Michelle is required by internal policy to get Nathan's approval for all orders. Nathan's been invited to Oliver's timber yard as Oliver's keen to get Nathan as a customer. However, Nathan is busy and doesn't want to go. So he sends Michelle in his place, telling Oliver that she deals with buying anyway. Meanwhile, Michelle was at Oliver's timber yard. She noticed a good price on some timber. Knowing that Nathan would need it soon for an existing project, she decided to buy it for Nathan. Oliver was delighted and set up a credit account in Nathan's name. Indicate whether the following statements are true or false. Okay, so we've got Michelle. She works in purchases department, so that might be relevant to us. We've got Nathan telling Oliver that Michelle deals with buying anyway. So we've got a statement made by a principal authorising Michelle to buy things. Michelle buys the timber. She buys it for Nathan, and we can see that because Oliver knew she was buying it for Nathan. He set up a credit account in Nathan's name. So, what have we got? First of all, we've got a list of statements. The first one, Michelle has no authority to make this contract on Nathan's behalf. Well, that is clearly false. We can see there that she may potentially have implied authority because she is in the purchasing department. We have probably apparent authority because Nathan has created the impression that Michelle is authorised to buy things. What we don't have is any express authority. At no point has Nathan said, go away and buy me some timber for this project. And in fact, we have this internal policy that she needs to get approval. So I would suggest that she doesn't have express authority. Part C, Michelle has implied authority to make this contract. Well, we think that's true because she works in the purchasing department. And she has ostensible authority because Nathan made that statement that gave the impression she had authority. I hope you did okay with that one. Now, the last thing on authority that I want you to have a look at is this table that shows the liability of the parties. The examiner does quite like to test this, so unfortunately, you are going to need to learn it. Now, what this table shows you is, depending on what the situation was, it shows you who should be liable under the contract. So remember, what we've got is this situation where we have an agent negotiating with a third party with a contract which will eventually be between the principal and the third party. Now, in the perfect situation, that's exactly what would happen. So, in the first situation, the agent had authority and was known to be an agent. So we're introducing a new step here. Did the third party know he was dealing with an agent, or did he think he was actually contracting with that person? Well, in that first situation, we're into the typical agency relationship. The third party is bound by the contract, and the contract is between him and the principal. So a third party may sue and be sued by the principal, and the principal may sue and be sued. The agent should fall out of this relationship in that he should have no liability under the contract and no ability to sue under the contract. There is one small exception to that, which is if the agent didn't mention that he was acting as agent when the contract was set up. The next scenario, though, is where the agent had authority but wasn't known to be an agent. So in this case, this is sort of extending that bullet point above. In this case, the third party can choose whether he wants to sue either the principal or the agent. So if I was the third party, I would choose the person that I think has the most money. The one that's a better bet, a safer bet, if you like. Now, the balance to that is that either the principal or the agent can sue on the contract. which makes sense, doesn't it? If you were the agent and you were liable to be sued under a contract, it would make sense if you were able also to enforce that contract. The point there, the agent's rights are subordinate to the principal's, means that if the principal wants to take action under the contract, he gets first call on it. And then we have the final scenario, which is where the agent had no authority to enter into the contract. Now, in that situation, the third party will have no rights against the principal, but he might have some claim against the agent. And this is the sort of scenario, where a random person walks into a shop and says he's buying on behalf of that famous pop star that lives in the village. Yeah, he's pretending to be an agent, which is probably a crime anyway, and therefore it wouldn't be fair if the famous pop star had to pick up the tab for that. The principal then, in this situation, would have no obligations at all, but the agent may well find that he is liable. Now, he's liable in two ways. The tort of deceit, and we'll look at torts in the next chapter. This is a very special tort, which gives rise to a civil claim for damages. Or breach of warranty of authority, and this is an implied term into the contract, an implied warranty that says that the agent had the capacity to enter into the contract. Okay. So if everything's fine, the contract is between the principal and the third party. If the agent had no authority at all, then the rights will lie between the agent and the third party, and then you have that middle category where the third party gets to choose. Okay, so I hope that's fairly clear. People do find agency a little bit difficult. We'll be returning to it when we look at partnership law, and again when we look at directors' duties later on. So hopefully by the time we've done all that, it will be a little bit clearer to you. In the meantime, have a look at some of the questions and see how you get on.